I do want to focus on markets because we did see equity trading just begin here at the stock exchange. And joining me now in studio with more is Bill Mann. He's a chief investment strategist at Motley Fool Asset Management. Bill, welcome to the show.
You can tell they've had a little bit of sugar, can't you?
Yes. And look, this stock market right near record highs. It's had some sugar, of course, from those April lows as well. What's on your radar as we head into this Fed decision this afternoon?
Well, so everyone pretty much expects at least 25 basis point cut, more towards a 50 basis point cut. So I would suggest that is probably pretty much priced into the market at this point. But we do have kind of a split market where you've got very few things that are driving the market, and a lot of the market itself has actually suffered a little bit. And so the undercurrent is that I think that the market and the economy do need a little bit of help. So we're constructive for this rate cut.
Okay, so what do you see as the undercurrent that would make a rate cut constructive?
So if you think about what the stock market has done, it's pretty much been the AI-driven companies, the Magnificent Seven. The S&P 493 has not nearly done as well. It has underperformed the remainder of the market, and that is, that's a symbol of the fact that really the main street of the U.S. is struggling in a way that the build out that's happened in AI, and we also have asset price appreciation, and the market is driven by consumer spending, especially at the affluent level. So it's a very thin economy right now, and so I think supporting the remainder of the market and the remainder of the economy is a really, really good thing to do.
So we know the Fed has a dual mandate, right? And it adjusts interest rates, short-term borrowing costs based on its dual mandate, which is maximum employment and contained inflation, right? Its long-term 2% target historically has been 2%, but we still see inflation above that. What is your view on both of those elements of its dual mandate?
So I think that they're actually, at this point, because it does seem that they're committed to rate cuts, they're throwing inflation over the side of the boat for the moment and focusing on the fact that we really have an economy where the underpinnings of it are really narrow in scope, and so I think that they're looking more towards employment as being their key measure at this point in time. And inflation is something that they would manage really once the more the worst performing parts of the economy are doing better.
Okay, so what we hear from the Fed chair at 2:30 p.m. Eastern, I think might really be the market-moving event, right? Because I'm sure he's going to get questions about the path forward for interest rates in 2026 amid what has been a more divided Fed of late because of these different elements within its dual mandate. What do you anticipate we could hear from the Fed chair?
Well, I think that he will be saying just that it has actually been a discussion that remains divided because, as you do say, inflation has been an issue and it remains so. And so there are inflation hawks and inflation doves within the Federal Reserve Board. And so I think that we'll see really the comments are going to reflect the fact that it has not been unanimous, that it has been a discussion that has a number of different factors that are moving in different directions.
Yeah, I do want to talk about the state of the stock market too, because we do see stocks hovering near record highs. November was a bit more of a choppy month, but as these rate expectations have crystallized the past few weeks, we have seen the S&P 500 quietly return to within striking distance of an all-time high. What's your view on valuations?
So it really depends on what you mean with the AI companies and with the Magnificent Seven. I mean, they've obviously done very well. They actually account for such a huge component of the S&P 500, really an historic amount, whereas the remainder of the market, anything outside of tech and AI, has not performed quite as well. So we have actually, Motley Fool Asset Management has just launched 3 new ETFs, and we're launching into a period of time in which we do see plenty of opportunity in both parts of the market. The parts of the market that have done well because they've done well for a reason, and for areas where we see more value.
And any stocks on your radar? I know the retailers are usually the last to report this earnings season. TJX seems to be a standout.
Yeah, TJX has been a really interesting company for us, and it is a component of our new innovative growth ETF, MFIG. It is a company that is actually oddly somewhat resistant to tariffs because they source 90% of their goods from inside of the United States, and they've already had the tariffs paid on them, so they are somewhat resistant there to an area that people are actually concerned about.
Thumbs up on FedEx into the holiday season?
Yes, absolutely, and
Thumbs up.
And I really look forward to what happens once they spin out their less than load FedEx Freight, which is happening next year.
Yeah.
And I think that we're very constructive on that as well.
I saw that on your list. Bill Mann, he's a chief investment strategist at Motley Fool Asset Management. Bill, thank you.
Thank you so much, Chris.
Yep.